Welcome everyone. In this video, we are going to analyze, can Xcn coin be 4 cents in 1 month? Don't forget to subscribe, like, and please watch to the end to understand. When we look at the recent price movements from a broader perspective, we can clearly observe the formation of a rather striking pattern. Especially with the recent strong upward wave, it's possible to get the impression that a classic cup pattern is being completed on the chart. Such cup formations are generally considered precursors to major and long-term bullish trends in technical analysis. Right now, we can confidently say that the price has formed the main body of this cup, and this structure is largely completed. However, there is a key detail to pay attention to here. After forming the main structure of the cup, the price has started to form a handle in line with the classical dynamics of the pattern. This handle movement is seen as a very natural process in technical analysis literature. Because rather than expecting the price to immediately surge upward after completing a large cup formation, it is considered much healthier for the market to go through a period of sideways or slightly downward correction. This helps temper excessive greed and creates a more solid foundation for a sustainable rally. Looking at the handle structure currently forming, we can see that the price is consolidating in a controlled manner without a sharp drop, occasionally facing light selling pressure but still maintaining strong support levels. This shows us that market participants are not acting hastily, but rather are taking positions in a cautious and deliberate manner. That's exactly why the completion of the handle formation could signal a much stronger breakout. In classic cup and handle formations, once the handle is completed and an upward breakout occurs, the price is typically expected to rise by an amount equal to the distance from the lowest point of the cup to its peak. So we're not just talking about a small move here, but potentially a significant rally. Therefore, the current handle formation process represents an extremely critical phase. If the price completes this handle formation in a healthy manner, which usually happens with some more sideways or slightly downward movement, then a strong breakout is expected, accompanied by an increase in volume. Following this breakout, as the upper boundaries of the previous cup structure are surpassed, the price is likely to gain significant momentum and reach new highs. In summary, the current price action is sending very positive signals in the bigger picture. Yes, in the short term, the handle formation may feel slow or even a bit frustrating, requiring patience. But for those focused on the larger picture, the move that comes once this handle is completed could be much more rewarding and powerful. That's why it's so important to remain patient at this stage, avoid panic selling, and carefully monitor whether the handle formation has been completed. Lastly, it's important to remember that healthy formations are never rushed. The market doesn't begin a major move without first building a solid foundation. That's why the handle process is essentially a period during which the market gathers strength and prepares for its next big step. And with this formation, the price could reach 4 cents. But relying solely on chart patterns is not enough. We also need to consider other metrics. Stay tuned. When we take a closer and broader look at the chart, we can clearly see that a descending wedge pattern is forming. Especially when examining the recent price movements, it's evident that the price is being compressed under downward pressure within a narrowing range. Yet at the same time, it's gathering strength within this compression. Descending wedge patterns are generally considered precursors to strong upward movements in technical analysis. Although these structures appear to have lower highs and lower lows, they actually indicate that the downward momentum is weakening and that sellers are no longer as dominant as before. The currently forming descending wedge reflects exactly this kind of process. At each new low, the price is dropping less than before, which is a sign that sellers are losing strength. One of the most important characteristics of descending wedge patterns is that when the formation is completed and price breaks to the upside, the breakout is usually sharp and supported by high volume. So we're not just talking about a small bounce here. If this wedge breaks out in accordance with textbook rules, a rapid upward move in the price is to be expected. Right now, we can see that the price is very close to breaking out of this descending wedge to the upside, especially with the increased volume in the last few candles and signs that buyers are becoming more aggressive. There are strong signals that this breakout may occur soon. The consolidation phase within the descending wedge is a period that requires patience, but often leads to a rewarding move once it's over. If the price breaks through the upper boundary of this wedge with strong volume, a significant positive momentum in the market is likely to follow. Moreover, by nature, the target levels of descending wedge patterns are typically calculated by projecting the height of the widest part of the wedge upwards from the breakout point. This means the breakout could not only trigger a short-term rise, but also potentially start a rally that impacts the price over the medium term. the current technical setup indicates that the price is building up strength to escape this compression and is preparing for an upward move. In conclusion, the descending wedge pattern forming here carries critical importance. Although the price hasn't yet broken clearly out of this structure, from a technical standpoint, an upward breakout is the more logical expectation due to the nature of the pattern. If this breakout occurs, market sentiment could quickly shift, and a sudden wave of buying may push the price to much higher levels. It's also important to remember that the moves following such patterns often exceed market expectations in strength. Therefore, it's crucial to closely monitor this wedge formation and be ready for the breakout moment. A breakout from this critical area to the upside would not only be significant from a technical standpoint, but would also boost market participants' confidence on a psychological level. The break of a long-standing downtrend structure would create the perception among investors that a new bullish trend is beginning. Naturally, this would further increase buying pressure. In short, this wedge pattern seems to offer a very promising opportunity for those who are patient. When we take a deeper look at the chart and use one of the technical analysis tools, the Fibonacci retracement, a distinct structure becomes apparent. Specifically, when drawing Fibonacci levels from a recent low to a subsequent high, followed by a short corrective move, we can clearly see that the price has made contact with the 0,382 Fibonacci retracement level. However, after this contact, it has not yet been able to make a sustained close above that level. Situations like this can indicate that the market is encountering resistance at that level and that there isn't yet sufficient momentum to break through. However, when we take a closer look at the current price action, we can see that the price is consolidating just below the 0,382 level and appears to be entering a phase of accumulation. This accumulation phase is typically seen as a preparatory stage for a second breakout attempt. Despite the selling pressure faced on the first attempt, the market has not given up. Instead of pulling back significantly, it is holding near that level. This indicates that buyers are still active in the market and are looking for an opportunity to make a stronger move. If this consolidation phase completes successfully and the price moves toward the 0,382 level again, there's a higher likelihood that this resistance could be broken. Especially if we start to see closes above this level, the price could then quickly move toward the 0,618 and 0,786 Fibonacci retracement levels, which is technically very possible. Additionally, if these levels are surpassed, not only do the Fibonacci targets come into play, but so do psychological levels. Looking at the current technical structure, we can confidently say that there's potential for the price to move toward the 4-cent area. That's because the 4-cent level has historically acted as a significant resistance and has now become a clear target based on investor psychology. These types of round price levels are often key decision points for traders, so reaching this area could trigger new waves of buying activity. In conclusion, this analysis, based on the Fibonacci retracement, shows us the following. The 0,382 level, which couldn't be broken on the first attempt, is now becoming more susceptible to a breakout thanks to the accumulation taking place. If the anticipated breakout occurs, not only will higher Fibonacci levels be targeted, but we may also see the price gain strong momentum toward the key psychological barrier at 4 cents. The current market structure presents a promising outlook for those who remain patient. Therefore, it is crucial to closely monitor price action, catch any potential breakout moments, and position accordingly. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.